how do you improve probabilities? What probabilities don't do, like I said, is deal with variance. What propensity is or does is deal with variance. So the whole idea of propensity is the idea of knowing that in this situation, this is likely to work. So that's the way that you want to try and do it. I'll give you another example using Roger Federer and explain that one in just a moment. But what I'm trying to get to here is, let's say you've got a trade that has a 60% win rate, a 60% chance of winning. What you can do to improve that, and I'm sure we've all been in certain situations where you can say to yourself, yes, but in this situation, this is definitely going to work. So what you're trying to do is increase your ability to spot the 60% rather than rely on taking every trade and assuming that 60% will win. What you're trying to do is say, right, 60% of these will win. I'm now going to look for things that indicate the propensity that they will win. So this is about knowing what it is about that trade that makes this a viable trade. And the example I've used here, so that this would be something you take from, say, tennis. You learn a certain shot and you're very good at that shot. Now, that shot is only going to be a viable shot in certain circumstances. I use this image, it's got Federer on it, but the example of, right, in this, you can either play the backhand straight down the court or you can play the backhand cross court. Now, if you've got that shot in your locker, that's great, but you can't play that every time and say, well, a certain probability or certain percentage of the time this works. You take the trade and go, right, I can see this as a shot, and the fact that your opponent is here suggests that that's now a good shot. I'm not a tennis coach, but that's the kind of point behind it. You're now taking a shot that you can execute and has a reasonable probability of working, but now I would say this has got a very high probability of working in this circumstance. And this is the point with being a new trader. You only need a few things that work. It's not a game that you have to win the entirety of. So if you ask yourself, could you beat Roger Federer at tennis? I'm pretty confident the answer is no. But could you, assuming that you've got some vague skill playing tennis, could you win a point off him? And if so, if let's say you got paid for each point you won off Roger Federer, you would be able to make some money. Arguably, you might be able to make enough money to make a living if you got paid per point. And so the point here being, you don't need lots and lots of skills and lots of things. You need to understand when the things that you've got give you a trade opportunity. That's the way to try and think about it. Trading's always open-ended. You can always generate new ideas, new ways to go about your trading. And you can get paid for each of those. You don't have to be able to do everything and be the best person in the business at the beginning. You just need enough to get yourself going. Context is absolutely crucial. And to give you a little example of this, this is a very experienced trader looking at a move in the Bund. Now, this is somebody who's got vast capacity of earnings. And the way the market's moved over the last couple of days, this is a Bund trade. Bund had moved 300 ticks to the downside. And he makes all of his money here. This one trade, a little long trade off the lows. And that's all his money for the day. It's not a vastly great day, but a majority of his trades done in other markets on the day. But a large amount of money has come from one very, very simple trade. And the thing is, what he's able to do is wait for that situation where he's got a play, he knows what this play is, and now all the things stack up that say, yep, this makes sense as a trade, go and execute. That's what gives you edge. That's how you use propensity and not probability to give you edge, because this is a trade you can then leverage up because it's got all the hallmarks that you're looking for. So I'll give you a further example of this. Improving probabilities then. So this head and shoulders pattern. Now, what propensity is all about, you can look at a head and shoulders pattern and go, yeah, they work X% of the time. I Googled it earlier and someone's claiming they work 85% of the time, which I'm very confident is not true. I'm not even going to go in to try and work the probabilities out. I'm interested in the propensity of this. I'm interested in identifying information that is going to help me make a better decision on this trade and give me an edge. So, what I'm trying to do here is okay, head and shoulders. This is an opportunity to take a trade. This isn't a trade on its own. So, what I then need is I can identify the head and shoulders pattern. There we go. Head and shoulders. You've got a shoulder. This is an inverted one. You've got a shoulder. You've got a head. You've got a shoulder. Great. What you're doing then is trying to add edge to this. You're trying to add understanding that this is one that will work. Delta gives you a bit of that. And I'll be doing more on this next week. Delta tells you that this can work. Volume then starts to pick up. That tells you this can work. So you're now creating this sequence of information. You don't need all the inputs at once. You need enough to get the idea off the ground, and then you can execute. Then it comes down to the order flow when you get to the breakout point, and then it's a case of letting the trade go to its defined target. I will give you an example of this. Right. So the break of the neckline is at 50. That's the point where you want to take the trade on. So from an order flow perspective, what you're watching for is you're watching for it getting above 50. And there's little things in order flow that you're looking at that you're interested in. That's helped me out. I'm not going to go into this in loads of detail because we're going to cover this in future sessions. But now that's got me thinking, yes, we've got above 50 and it's not backing off. Little flick back to 50. No need to panic on that at all. Little flick back. You're happy with this trade now. All of those things have stacked up that have said, yep, this makes sense. This makes sense. This makes sense. So now this isn't a trade with an X probability. This is a trade with a high propensity of working. It looks like a head and shoulders. It's got hallmarks of a market that is reversing to the upside. It's got the structure, which I'm not showing here and I'll show next week. It's got the structure behind it to suggest an upside move is viable. Oil had dropped around about $10 over the previous couple of days. So a reversal was kind of on the cards. All of those things stack up to say, yes, this is one that's worth taking on. That's the way that you want to be trying to look at these types of trades. That's what gives you edge, and that's how you improve probabilities. So, for anybody as a new trader, what you're trying to do then is you're trying to find one or two things. Note that chart, not complex. There's not a million and one lines on it, million and one indicators, anything like that. It's simple, dead simple, and you add information as time goes by. The trick is working out what the effective information is.